following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Kevin in Orlando. Hey, Kevin, what's going on?
Hey, I'm doing great. You know, I am addicted to TFNN.
We appreciate you growling and prowling with us out here. It's a great network, man. And I want to thank everyone out there, for making it a great network.
Well, it's great because I do outside sales, so I get to have the station on my phone the whole day. And when I go pick up the kids from school at 3 o'clock, they all love it and giving the old wow. Educating the kids at a young age is a good thing.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Miracles happen when you forgive. You are born with the capacity to forgive, but you learn the opposite behavior. You learn not to forgive. You practice not to forgive, and you master not to forgive. When you learn to let go of your pride and ask for forgiveness, miracles start to happen in your life. Market-wise, let's take a look at it out here. We have the Dow Industrials up 99, NASDAQ up 43, S&P's up 12, gold contract up $9, trading at $1,260 an ounce. Silver up 27 cents at $17.65 an ounce. Platinum down $8, $9.61 an ounce. Copper up 3 pennies at $2.19 a pound. Light sweet crude up $1.36, $51.18 a barrel. Bonds, 10-year note down 9 ticks, 129.25. 30-year bond up 23 ticks, 164.06. King dollar up 256 ticks, trading at 96.91. The euro is at $1.11, and the yen is at 103.66. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so you get the Columbus Day holiday. Bottom line, banks are closed, markets open, no volume. The SPY hit a high today of $216.70. Bottom line, have volume out here of 37 million. SPY can't get out of its own way. That's the bottom line. Not even close. Dow Industrials, same setup in the Dow Industrials. Dow Industrials out here got to a price point today of $18,399. It's trying to make it into the September 9th downdraft once again, which is 18,404. Now, that being said, I expect it's going to try to make it in there again tomorrow. Why? Well, if we go over to the NQs first, if we look at the 3Qs, what you're going to see at 3Qs is this. You have 16 million shares traded. The September 22nd high is $119.22, and you're over it. If we look at the futures, we go into the futures of the NDX 100. What you're going to see is that we're at 48.98. And you're talking about 48.92. That it's getting taken out. It's 6 points over it. It has been as many as 9 points over it. I expect that's going to run again tomorrow. It is lighter volume. The reason I expect it's going to run is that it's waiting for its buddy at the composite. The composite thus far hasn't made it. The NASDAQ composite, which is all the stocks inside the NASDAQ. The composite right now is trading at 53.36. It got to a high of 53.40. The high is 53.42. I expect it's going to hit it. We'll see whether it's a failure or not once it gets up to that level. Gold contract. What do we have with gold? Gold contract out here is trading sideways. You're up $9. You've done 126,000 contracts. You're at 1261. Bottom line, as long as gold stays inside Brexit Day of June 24th, which is the 1259, that'll build cause to get up into the 1305 level where it broke down from again. The real question with gold is it going to build cause and get up to its strength, or is it going to go up there with anemic volume and building another ABC structure on the way down? Silver is stronger than gold out here, actually given a bit more information. Silver was the first one to get underneath Brexit. It went underneath the 1725 area, rejected it, had lighter volume on the rejection. You're at 1765. I expect silver's going to make that run up to 1856 also. Bonds. We go into the note market first. Notes and bonds, both cases, they're testing their lows. The low that we're talking about is the swing low that was generated out here on the 13th of September, which is 129.26. Right now, you're at 129.25. I expect you're going to see a rejection of this overnight tonight. We'll see where it shakes out. It's right there. It's coming into that area. Lighter volume. Yes, banks are closed, so it slows down the bond trading. No doubt about that. But bottom line, plenty of times I've seen this. When they come in with lighter volume, this is when, bottom line, they'll make bottoms. 30-year. 30-year is going to have to get a little juice. The swing low that we're talking about on the 30-year is 164.13. We're at 164.06. We'll see how this shakes out tonight, but I do expect that that's what we're going to get. King dollar. What do we have with King dollar? King dollar out here has 15,000 contracts, up 266 ticks. You're at 96.92. And I suspect probably overnight King dollar is going to go test the 97.21 area. 97.21 was the high of Friday. We'll see whether it can make it, meaning make it with volume. King dollar was coming into the downdraft that had been created out here on July 27th and 28th. And it's right next to the swing point of 97.61. And my take right now is that it's actually not going to make that swing point because of the amount of energy that came out of the market, meaning the dollar going up, metals going down, gold going down, silver going down, all of the above. That was very fast movement. When you have that much, when the markets move that fast, they basically lose their energy, and you have to build cars in order to get to higher price once again. The yen, we go take a look at the yen. What you have with the yen out here, the yen right now is trading at 103.65. Bottom line, we'll see whether it can get into this 104.32 area. 104.32 was the swing point from September 2nd. We got to 104.16 last Thursday night. And so the yen's going to be a wild card out here. The euro, we take a look at the euro. The euro right now is trading at $1.11, and the lower end of this range is $1.1123. And we're at 111.37. Oil, what do we have with oil? Oil catches a bid. Oil's over the $50 mark. Has the juice behind the move, too. 608,000 contracts on oil. We're at 51.20, and with game is out here. You get the swing point at 52. You get the largest swing point at 52.39. And if we take this and let's put this on a continuous contract. Okay, so I bring this back a week. I put it on a weekly rather than bringing it back a couple of years. So notice a big number. Okay, so check it out. So if we launched 51.67, you're going to see a real launch in oil. Oh, this is going to be a trip. Okay, so 51.67 on a continuous contract, folks, is it. You launch that, and guess what? Oil will be up at 61.82, and then we'll see what the market thinks about that. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials right now up 93. Nasdaq's up 40. S&Ps are up 11. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is up 96, Nasdaq's up 41, S&Ps are up 11, and as we do each and every Monday at 20 past the first hour, we have our man, Mr. Steve Rhodes. And don't forget, folks, at TFNN, every Monday, Wednesday, Friday, we start live programming at 8 o'clock in the morning. We go to 5 in the afternoon. Tuesday, Thursday, 7 o'clock in the morning to 6 in the afternoon. We take all that programming and replay it all night long. You can get all that programming right on your cell phone. If you happen to be listening in your car, whether you're in the East Coast, West Coast, the middle of the country right now, remember that you can go to TFNN.com on your cell phone, hit Tiger TV. You're going to get some great HD video as well as audio. Our man, Mr. Steve Rhodes, does a great show every trading day, 1 to 2 Eastern Standard Time. Also has a great newsletter, Mastering Probability. Now, coming a week from this Wednesday, October 19th, he's going to be doing a workshop. The workshop is going to be from 5 to 6 p.m. Eastern Standard Time. The workshop is only $49, and what you get for $49 is this, folks. Pretty amazing. So the workshop is for his subscribers. You can be a subscriber. Normally it's $149. It's only $49. You can test drive it for the month. You get the newsletter. You're going to get the workshop. Plus, you're going to get 3 other workshops that Steve has already done. So if you sign up right now, you're going to have these on your computer, on your iPad, on whatever you want tonight, right now. You're going to get Steve's 90-minute money management workshop, which is $149 value. You're going to get his long shot line, the oscillator unchanged line, which is $149 value. You're going to get his Japanese candles, $149 value, and his ultimate reversal pattern, which is $149 value. Now I'm going to let our man, Mr. Steve Rhodes, tell you what he's going to teach you on a week from this Wednesday. Steve Rhodes, what's going on?
What a wonderful market. Yes, no lightest volume day of the year. In fact, in the SPYs, looks like we will end up with a lighter volume day than we did on December 24th. It's
which
amazing.
Is
pretty hard to do.
And it really is. And it's amazing that, that I can't figure out how, Columbus Day ended up being a federal holiday and the bank's closed and the market's not closed. It's like so weird.
Yeah, exactly. But it is what it is.
It is.
And so,
it is.
Yeah. So as you mentioned, I'm going to be doing a workshop a week from this coming Wednesday. I'm going to teach subscribers during that workshop how to identify and plot horizontal levels of support and resistance.
Okay.
Which we refer to as trading range boundary lines. And they often contain price moves, so they're really important to know. I'm also going to be able to teach subscribers the different different diagonal, both rising and falling price channels. I'll teach subscribers, attendees of the workshop, how to trade the lightning bolt pattern, the A to B equals CD pattern with inside of these. Also how to identify breakouts, and more importantly, how to project the price move. So let's look at why these are so important. The first chart that I've got on my screen, because both you and I are focused on, is the NDX 100.
Yes.
And this chart here happens to be, Tom, the monthly chart for the NDX 100. And the red lines, the red horizontal lines that you see on my screen,
Okay.
the solid lines represent the primary, the major support and resistance level. So what's interesting here about the NDX 100 is we are above the most recent monthly significant level of support, which was 4584.29.
Yes.
This says what this would say is for long-term investors, people with their 401ks who might be invested somehow in an NDX 100 type of ETF, that what they should anticipate is a move up to about 49.58. Oftentimes, the midpoint between the significant horizontal trading range boundary lines can be levels where you see a reversal. You don't have to, but it is a level that you want to make sure that you pay attention to. What this also communicates to you and I from a long-term standpoint is that any pullback, any surprise out there, that the NDX 100 should find support at the 45.84 level. Now, if you were a person that was taking a look at, hey, let's look at the rising price channels with inside the NDX 100.
Okay.
And they also, Tom, they also support a move higher. That is, as long as price stays above the 2000 top, the 2000 high, which was 48.16. So in this case here, the previous chart we looked at horizontal levels of support and resistance. Here
Yes.
we're looking at diagonal, and just like the horizontal lines create multiple levels of horizontal support and resistance that are the same distance in price, so too can a rising or falling price channel. And here we can see two different diagonal, lower left to upper right diagonal lines out there. And once one channel breaks, what we do is just simply multiply that equals the price distance of the first channel to help us identify levels of resistance. We can see how this has worked beautifully out here. So this also tells us that as long as price stays above, now here I'm taking a look at, this is also a monthly chart. Here we're taking a look, as long as price stays above that 48.16 level, things should be good to the north. If we take a look at somebody that might use a weekly type chart to make their trading decisions, instead of using monthly horizontal trading ranges, what I'm using are weekly. Now, the difference is that when I take a look, I've always maintained that the body of a candle, because as you know, I love using Japanese candlesticks, and so I kind of eliminate the wicks. Not that the wick or the upper lower shadows of a candle don't have meaning, but they really tend to measure the extreme emotion during that candlestick. So I utilize the body of the candle session, and a weekly close is going to be different than a monthly close,
Yes.
daily closes. So these, I've got a tool here that helps us to identify on those time frames where those levels are. So interestingly enough, the mid level that the intermediate charts communicate to you and I is the 49.20 level, 49.1972 to be exact. So we're getting very close to an area where the NDX 100 could find some type of short-term resistance. And if we switch over to a daily panel out here, the daily panel says, hey, you know what? I might want to make a move price-wise up to the 49.83 level out here. So we've already completed the 1-to-1 A to B equals CD. We're above that level, which is 48.65. No reason for it to not try to make its next move, which is 49.83. So if I summarize all this, we take a look at weekly. This now has the weekly, the daily, and the monthly lines on here. What we see is there's some significant resistance ahead, which sort of really emulates the type of market that we've had here during 2016. So 49.19 to 49.83 becomes a real significant resistance zone for price out there. So we need to keep our seatbelts fastened. And again, folks, if you come over to the homepage of TFNN.com, and as Tom mentioned, if you sign up now for $49, You're going to get my monthly newsletter for 30 days. You're going to get the workshop that is dealing with that, where I'm going to be teaching you about these horizontal and diagonal levels of support and resistance. You're going to get access to my Japanese candlestick workshop, my ultimate trading patterns workshop, my long short line workshop. And the reason that you want to take a look at these, here is a chart for silver, Tom, a daily chart for silver. And price will continue to move higher until the bears show up. And that shows up in a Japanese candlestick, just like price will go lower until the bulls show up. Then we can see that today we have a nice little three-river morning star pattern out here. And when we take a look at integrating candlesticks with the different patterns, here's a lightning bolt pattern. It says there was a 1 to 1 A to B equals CD that completed at 1738. We just received today a bottoming signal inside of silver. By the way, in an intraday chart time frame, this happens to be a 2-hour chart for gold. We can utilize these patterns on all different time frames. It too is giving us a bottoming signal. So I'll teach all these patterns at the workshop. Plus, it's on their members page. So come on over to the page at TFNN.com, folks. Sign up for it now.
You're going to see it right in the very top of the carousel, folks. Trading range boundary lines, October 19th with our man, Mr. Steve Rhodes. Steve, thanks so much, man. Have a great one, a safe one. Look forward to the show tomorrow.
Thanks, Tom.
Stay right there, folks. We're coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special 1-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 1-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Dow right now is up 97. You get the NASDAQ up 41. S&Ps are up 11. And when we do talk volume, you're talking about short volume big time. On the NYSE right now, you're at 439 million, so that'll bang in about 625 probably. You get quite a bit in the last half hour. And on the NASDAQ, On the NASDAQ right now, we are at 1 billion. Oh, that's really shot. This is pretty amazing. 1 billion. If we take a look at the SPYs are laying out here at 38 million. The Qs are not bad. The Qs, those Qs want to go higher. The Qs have, that's 16 million. The last time we were up there, which is a full day, was 22 million. So that's not that bad. The strength inside the Dow Industrials out here is ExxonMobil. That's up 2%. Apple's up 1.9. Merck is up 1.6, and Chevron is up 1.6. Let's go over to ExxonMobil. So ExxonMobil is up $1.72, trading at 88.46, and that is coming into its downdraft that was created out here in July. So the high of Exxon is at 90.95. If we go to the XLE and see how this is setting up, this is a nice setup. To let it test the high and then see whether it can make it or break it. Thus far, now this high has been sitting out here since September 8th. That is $71.94. We hit $71.98 today. You're going to do it with 18 million versus 7 million. This high has 18 million. You're into it for 7 million. If we go to Chevron, let's just look at Chevron, because what you do have happen here, yeah, Chevrons can't make it either. Okay, so check this out. So the XLE, inside the XLE, your largest weighting structures are Exxon and Chevron. Exxon is 17.25%, Chevron's 14%. So you're talking about 31.2%. And now when you look at both of these equities, they both look to me like, you know what, Chevron is coming into a downdraft with 4.6 million, and you're coming into 9.3, you're coming into 8.2, you're over 11.5. That's saying that the XLE is not going to be able to handle and stay over that price. So it's going to be kind of intriguing next couple of days. The XLF, because what I expect you're going to see, tomorrow we'll get some real trading in here, meaning, volatility, all of the above, starting on tomorrow after the market or before the market. So tomorrow kicks off earnings, folks. Alcoa is trading at $31. They kick off earnings tomorrow morning before the market opens. And Alcoa right now, let's look at Alcoa. This is always a dog, too. It's pretty amazing. So Alcoa, we put this on a 5-year weekly. You're going to see it's down from $53, and this thing just can't seem to handle $32.88. Now, it had a good week last week. Let me bring this closer. Okay, so last week, I see what's happening now. You push with 43 million. Yeah, you're still going into 53. So the way it looks like with Alcoa, it looks like, guess what? That this thing is not going to be able to handle this consolidation, the top of the consolidation, which is the October 9th level. Twitter, TWTR, they've taken apart Twitter. Rumors, and this is pretty cool when you watch Twitter. So Twitter, folks, is down 235. It's trading $17.50. Now, check this out. So Twitter on the 22nd of September closed at $18.63. 9 trading days later, it's up at $25.25. Gaps down Friday, gaps down this morning. And when you take a look at this, what you have, and this is a cool setup. Now, we bought this morning inside my daily newsletter. And it's unusual inside the aspect that you see something that gets this whacked this quick. But this is what it is. This is what it is. This is why the buy was there. You have 3 separate weeks. First off, when it took the B point out 2 weeks ago, it took it out with volume. So it was an ABC structure on the way up. It did the full ABC structure up, 25-25. It gets blown out of the water. As it gets blown out of the water, what happens is that it's going into 2 separate monster One was a monster downdraft, one was a monster updraft. But in both cases, the volume is huge. If you happen to be watching Tiger TV, the first place was the week of the 29th of April. We did 210 million shares there. That high point is 1798. The second one is the July 29th level. The high of that is 1870. The low is 1560. Now, my take on this, and if you have the out of time in the trade, you know this is like a really sweet setup for the out of time in the trade. Because what it is that it's going to be really tough after you've already come down with monster volume in order to flush out even more when you're coming into higher volume bars. Because it's already come into this higher volume bar. They're trying to get in another one. And it looks like at this particular point, all it had to do today coming into the close, which it looks like it's going to do, is get back inside 1752. And it's got as low as 1693. It's at 1757 right now, because if you get back inside that, that's the swing point that was correlated out here on the 13th of September. And guess what? That's game to, bottom line, to gap higher again. Because when you get all these gaps, this is we got a gap up. You get two separate gaps down. That normally sets up a consolidation. You know, it's a wild one, but that's what it normally sets up. So we'll see how that baby shakes out. What I do expect, and the danger here. Let me go back over there, because this is what the danger is. So that is one scenario. One of the Tigers in the Den says 3 gap play. That is the danger. The danger in this is that it's gapped twice, and that the danger is that it gaps right underneath 1569. That's no doubt that's a danger. I still like the setup. The reason I like the setup is for what I just explained, though, because what happens is that the amount of folks that already get flushed out is pretty intense. You know, so we'll see where it shakes out. And what I do expect we're going to see, because of the way that the NDX 100 is pushing highs, at highs, and the NASDAQ composite is not quite at that high yet. I'm figuring the NDX is going to drag the NASDAQ composite up. As the composite gets dragged up, I don't expect we're going to see the S&P or the Dow at highs. What I do expect we're going to see is that they're both, once again, going to try to get into the 9th of September downdraft. And they've had a heck of a time doing it. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials up 88. NASDAQ's up 38. S&Ps are up 10. Gold's up 870. Silver's up 27 cents. We're going to be right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go take a look at the banks, the XLF. So XLF is trading out here $19.72. It's up 10 cents today. That is going into the downdraft that had been created out here on September 9th. Now, this is dramatically lighter volume, and this is going to be a failure. So you got the yin and the yang out here, folks. And if we go, let's go to J.P. Morgan. Let's take a look at J.P. Morgan. J.P. Morgan is over its highs, 11 million shares. When I say over the highs, that's the highs that were established since May. Coming into, yeah, this is beautiful. This is beautiful if you want to be shot. So you're going into the August 2015 highs. You know, so check this out today. This is pretty intense. We got to a price point today of $69.06. You're at $68.65. It's going into $68.36. And that had 85 million shares, and you're at 11 million. The high out here had 85, well, the high had 65 million. And then we've come down on 114 million. This is a nice setup to go south. That's JP Morgan. Let's go take a look at Morgan Stanley. Morgan Stanley's at highs. You have 32.57. This is also just the nice. This is coming into 104 million, and last week on a weekly we did 153. Berkshire Hathaway. So Berkshire Hathaway is the largest weighting structure inside the XLF. And Berkshire Hathaway right now looks like an ABC structure on the way down. The high was 151.06 in the last 6 months. It's trading at 145. That high itself was coming into its 2014 high, and it couldn't handle it. Yeah, this is, 136. This wants to trade to 136. So when you take a look, okay, so I'm going to go from the financials now. Now we want to go in the bond market. This is why. The S&Ps don't look to me like I can get by September 9th. The Dow can't go by September 9th. The financials want to go lower. What does that add up to? That adds up to, folks, that even in December, they're not going to go up in rates. Now, the Fed Fund futures rate, the probability of that going up in December is 67%. Let's go over and take a look at the 30-year bond. And we're going to know a huge amount tomorrow, because I expect tonight, when we come in tomorrow morning, well, these bonds will trade all night. But bottom line, I expect that you're going to see this 30-year bond over 164.13. You're going to see a rejection of lower price. If we go to the 10-year and look at the same deal, because the banks are closed out here today. The bonds are trading, however, but very light. If you look at the 10-year is at 129.25, and 129.26 is what we're dealing with. And then if we go to King Dollar and look at King Dollar looks to me like all it's going to be able to do is test the highs of Friday. And the reason for that, as I said a little bit earlier, it was the amount of energy. What had happened in the dollar, the metals, and a lot of the commodities is that what you had is that you had the price point. I mean, on Tuesday, it expended a huge amount of energy. That we went from 95.60 to 96.39. On Friday, huge amount of energy once again. Today, you're coming into that energy, and we've done 16,000 contracts rather, versus 49,000. So I do expect the top of that to get hit, but that's it. So it's going to be tonight watching this market, tomorrow morning watching this market is going to be pretty cool. The NDX, however, that being said, and this is where it's going to, you're going to have some divergence, and the volatility is going to continue to stay in the market. That NDX does want to, looks to me, want to stretch the market, push, if we go over let's go over these NQs for a second. So we take a look at the NQs. The NQs right now are over the high. The high of the NQs is 48.92. We're at 48.93. And I expect you're going to close over it. And the NQs the NQs can really spike like 10, 20 points in a heartbeat, folks, okay? And what that would do is that because we've been here so long, there's plenty of buy stops above this of people that are short. And when you get this close to it, it's like, okay, we're going to see how many more buyers are above this area. And this is where a large operator is going to push it, and you'll see this spike. And I suspect we're going to see that spike when we're opening tomorrow morning. More than likely, if you trade futures, come on and join us in the Tiger's Den, because you're going to see that spike before 9:30 in the morning. It's a beautiful thing too. Volume-wise, what we have, the reason I'm saying it's a beautiful thing, because when you get that type of divergence, that is that amazing, that the NDX is over, but the SPYs aren't, the Dow isn't. Oh, let's do the Russell. So we go over to the Russell 2000. We take a look at the Russell 2000. This can't handle higher price either. Now, the high in the Russell, thus far, the high we're talking about here is only the last 6 months, because the Russell's much higher, the high. Right now, we're 1250. The high of the last 6 months is 1263, and if we pull this back, what you're going to see is that the Russell, the high of the actual Russell is 1295. So the Russell has had a hard time coming through July of last year, and that's where, we started down in June. The Russell went from 1295 and ended up down at 1078. The kickoff of earnings are going to be out there. If we go take a look at inside the NDX, well, inside the NDX, because Samsung is having so much trouble, Apple is definitely a wild card. Apple today is up $31. They have 31 million shares. They're up $2. They're trading at 116.19. That's over the highs, so that's saying that can go higher. Let's see what we have. Yeah, this could put enough juice in it. So this is Apple. The way Apple's set up right now, Apple can go test 119.86. 3 more points in Apple would get it some juice. You'd get the NDX some juice. Right now, you get Mylan Pharmaceutical was the largest mover inside the NDX 100. Now, someone else is going to have to take that over, because Mylan opened up at $40.32. It's trading at $38.87. That being said, all as Mylan Pharmaceutical is a dead cat bounce. This equity has been not only going down, but it went down with vicious volume. We came off a high of $76. You're at $38 right now, and it's hammering this $38 level, $39 level, $38 level with volume. And the longer that it stays underneath it, it looks to me like Mylan's going to actually get down to $23. You stay right there, folks. We're going to be coming right back. Dow Industrials right now are trading up 85. The Nasdaq's up 36. S&Ps are up 10. Gold's up 920. We're going to be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is up 84. You got the Nasdaq up 35. S&Ps are up 10. And don't forget, folks, if you'd like to test drive either the gold report or my daily newsletter, Market Insights, you can do that by coming over to our website at TFNN. You go to newsletters. If you'd like to test drive the gold report, go to investment newsletters. You can test drive the gold report 30 days absolutely free. If you'd like to test drive Market Insights, you go to newsletters, you go to trading newsletters, you can test drive Market Insights 2 weeks absolutely free. Bottom line is you can do both of them. If we do go over to that gold market and take a look at the XAU, the HUI, what you're going to see is that the XAU out here is up 36 cents, $81.68. This has to get back inside 82.04. 82.04 is the... Oh, 1 second. There we go. There she is. Okay, 1 second. There we go. The HUI. We take a look at the HUI. We're looking at the HUI. HUI right now is trading at $199. And this one here, you want to see this thing get back inside the 203.55. What I do expect you're going to see is both of these are going to move back up to where they broke down from. And we'll see how we move into that area. If we go look at the actual gold contract, what I'm looking at is this. Right now the contract's at 1261. We're consolidating a long period of time. We're building cause for lower price. Got the wide price spread, accelerated volume, all of the above. Got right into Brexit day, which is the 1259.10. The low was 1243. And this is where the catch is going to be, meaning how we do the bounce is going to tell us all about are you going to go back to 1202 in this gold contract. Because there's a price projection of 1202. What the difference is that because of the velocity of the move, it took anyone and everyone that was in that market out. And when you do a clean out, it doesn't take a lot of buying in order to basically start a whole new market. And that's where I think we are right now. We'll get a real good understanding, though, of the first move either up or down. And what you'd be looking for, if it's the move down, well, it's going to have a lot of volume to go break the 1243 area because of the way that we went downtown the last time we went down. And we'll see where it goes. If it's the way up, what you're going to look for is you're going to look for 1 or 2 days of wide price spread, accelerated volume, pull back with lighter volume. That would be an indication that, guess what? You're not going to do an ABC structure on the way down. What you're doing is you're building cause to get into the 1305 area. But I do expect this is going to be a good battle going on. And what it's going to have to do with, it's going to have to do everything with this quarter-point interest rate rise or not rise in December 14th. That's the way this market is setting up right now. The Fed Fund futures rate is still saying that the market, is betting on it. We'll see whether the market's ready for it. The way that bonds are trading to me right now, it's saying, guess what? The bond market has looked the last 3 years about 3 or 4 times that rates would really go up. But each and every time, it's rejected that swing point, rejected it with lighter volume, and then took off again. And that's exactly what they've just done again. And they haven't, this is the kicker with bonds, they haven't broken a swing point on the way down. Bond, the 30-year would have to get to 160.31, and it's already stalling here. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right back here tomorrow morning, 8 o'clock. Wow! Go get them, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.